Hey everybody, my name's Allison and I am the Director of Risk Tolerance here at Simpler Trading. Today I'm going to introduce you to a potential longer term setup that I've been keeping an eye on and liking quite a bit in PHM. This is a weekly chart on PHM and right now it's starting to show a nice bullish setup. So I just wanted to kind of go through that and walk through why this one might be a longer term bullish pick for your account. Right now, we can see on our simple moving averages, this is the 10 period simple, this is the 30 period simple, and this is the 100 period simple moving average. All of them are stacked up on top of each other. The 10 is above the 30 and both are above the 100. This is a good bullish pattern in regards to our simple moving average. Typically speaking, when we're in a pattern like this, we usually start to go into a bullish trend. A great example of that is back here, right? The 10 was above the 30, both were above the 100. And we can see that we went from this consolidation of a move from around $21 up to around $34 on a weekly chart whenever that started to occur. Another bullish sign is on the awesome oscillator here. It is starting to build up in green bars above this red line, which is the 0 line. Typically speaking, when you see this start to occur, that is showing you strength and momentum and usually is another bullish sign to the upside. We of course have a nice weekly squeeze printing, which means we might see a greater than expected move higher. So that's always a good indicator to keep an eye out for. And then lastly, I want to highlight the compound breakout tool here. This is an indicator I helped create. I am a very big fan of it. It helps introduce both long-term bullish and bearish trend signals, as well as lets you know when we might be hitting consolidation. And so far, going into the end of this week, we still have 2 more trading day left. But as of right now, it is starting to print a bullish signal. So if we go into Friday with this signal printing, this is an excellent sign to look at going long on PHM. The last time we saw this signal print, we saw a move above our moving averages, turning them from resistance into support. We too also had a weekly squeeze and momentum paired with it building. And you can see we had a nice trend to the upside. So we're getting a similar signal starting to print here. Bollinger Bands are flaring open. The price usually likes to trade within this second deviation Bollinger Band, which is this inside line here. And when they're flaring open like this, that means that they are anticipating that the price is going to move to the upside. So they're trying to make room for it, much like we saw back here whenever it flared open to the upside. So we're getting a similar situation here. We also had that back here occur. So all of this is a good sign, especially with the compound breakout tool, that this is going to move to the upside on a weekly chart. So for myself, I would want to just go with a simple long call. You could also look to jump into the shares themselves. They're rather inexpensive, but to keep my capital risk lower, I would look out to an October monthly expiration. That gives me at least 30 days for this trade to work out. And I would look at an in the money long call, very simple and easy to do. And as you can see here, still relatively a low amount of risk. Ideally, I like to look at a 0.7 delta or higher when I go in the money for a long call. A 0.7 delta is the 33 strike currently. If you want a little bit higher than that, the 32 strike would also be a good one to go with. Both of those have a decent amount of open interest and are certainly relatively inexpensive for the account. If your capital risk is usually around $500 to $600, you could easily look at 2 contracts and still maintaining your risk, whether it's the 33 strike or 32 strike, and look for that anticipated move to the upside. The daily chart is also already starting to show bullish signs, but I would play this more off the weekly with the idea that the squeeze could end up firing and could certainly end up firing within the next month or so. If you wanted to give yourself even more time, you could certainly look to go further out. The next expiration available is all the way in January, but even then you can see good amount of open interest and relatively inexpensive strikes. That 0.7 delta might have you closer to the 32 or 31 strike, so you might be paying a little bit more, but you're certainly giving yourself plenty of time to allow that move up to occur. For myself, I think I'd lean towards the October monthly expiration, because it's a little bit less expensive. And with how everything else is looking, I probably plan to take profits on this a little bit sooner and play for a short-term move up, ideally with that weekly squeeze firing in my favor. So this is the idea on PHM. For those of you who are curious about the compound breakout tool and how that can be beneficial, I would certainly recommend checking out the free webinar that I'm hosting Thursday, tomorrow evening at 7. It will be a recorded webinar, so even if you are not able to join, you can always watch the recording of it if you sign up. In that, we will go over the profit recycling strategy and how I use that strategy to avoid day trading rules and still be able to take profits on these crazy intraday moves that we've been having recently. And I'll also be highlighting the compound breakout tool, which is this indicator, right, giving this bullish signal here. And I'll highlight how to identify bearish, bullish, or consolidating trends, as well as great entries and exits, and how I find it beneficial to my trading overall to lock in some great profits for my account. The website page for that is simplertrading.com/weekly. So if you're interested in signing up for the free webinar, please feel free to check it out. I look forward to seeing all of y'all tomorrow. As always, may the trade be with you, and I hope you have a great rest of your day. Bye.